Hello traders, good morning. Welcome to the live advanced bookmap webinar. Today we're joined by Scott Pulcini, a professional futures trader. We do this every Thursday, 10 a.m. Eastern Time. It forms part of the education here at Bookmap. Usually Bruce, our lead Bookmap educator, hosts these, but he's away this week, so my name's Sam. I'll be helping Scott today. Just a few things to take care of before we dive in, guys, if you could bear with me. So Scott's contact information, you can find out more about him on his website, scottpulcinitrader.com. You can also connect with him on Twitter, Scott Pulcini TR1. And the risk disclosure here. All Bookmap Limited materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, that's it from me. Scott, are you there, sir? I see you're in the room. Can you hear me?
Okay. You hear me now?
Yep, I hear you. How are you?
Sam, could you hear me?
Yes, I hear you. You hear me?
Okay. Yep.
Good stuff.
Alright, let's show the screen here. Alright, you got my screen?
Yes. I'll just set it up. Yep, I see you.
Alright. There's currently log ES here. It's a little sticky area that I was a little hesitant to put this on, but I thought, well, we'll go over these areas here in a second, but I thought we can push a little higher here, and I still think we can. Anyway, we had basically right at the open, you had some sell ice here. We had almost 600 here, and then another 1200 here, so you're looking at almost 1800, over 1800 iceberg sell ice here, and then there was a stop run, almost 1,000 stop run here, you can see. So black zone is the sell ice, and then I drew the stop run, and then I traded out the stop run. I got in aggressively an ATR, just outside an ATR out of there, because we are above the yellow lug, and my stop goes an ATR below the zone. So it's not looking real promising now, but we'll see if this zone can hold. If it doesn't, then stop out and move on. So you can see here, this is why I was a little hesitant of taking this trade. So this is a prior market profile composite, and this is an older one here, and we were right there, and I would have much rather seen it poke in here and then retest and then go, but I was aggressive with this because we drew new lugs and we were above the yellow lug. You can see it stopped at the baby lug, and now it's pulling back here. So this needs to hold, as far as lugs are concerned. I use these extensively. These are, very, very good for day trading. You guys have seen them in prior webinars. If you want more information or try them out, you got a free 3-day trial. Just go to our website, ludwiglevels.com. Say you're selling more information or try them. Special pricing for you guys, but that's what this is. But as far as lugs are concerned, when you build new lugs, you want to see the market should hold prior red. So prior red was resistance. It's just like anything else in trading as far as prior resistance should be support. So you want to see it hold directional yellow, the new directional yellow. The last stand would be prior red. So this needs to hold right here, or else this is probably coming down to the blue.
Soybean iceberg buys ES 150 contracts.
And if this fails here and gets below here, and I start getting setups, I'll stop out and then I'll start looking for shorts. So this is, this market is short-term bullish, but we're approaching areas that this is another reason why I was hesitant of taking this. I thought there was a little upside, more upside in this. I do think we can get to this zone, and then I really want to see what happens in this zone. This zone is pretty important here, right? So you can see, I draw my zones on the 4 important areas of charting, tops and bottoms of balances, high volume nodes of balances, directional conviction, which gaps are. That's a gap there. This is directional conviction as well, and here, and buying and selling tails. So again, this zone was the day closed right here, and then we gapped down this day huge. So this was a really important zone. We got back into it. We did get through it, and you can see then it served as support, just like we were talking about. Resistance is now, or support is now resistance in this case. Then what we had here last week was a failed breakout of this balance and led to this big down move, right? So this zone is basically the high volume node of this balance, which we've never retested yet after we did that. And then you can see this was directional conviction for here. It actually started from here, but this was important because this was where it sliced right through the high volume node of this. So that I'm going to be watching closely. If this can't get through here, if I survive this long right now, I will be probably getting out in this zone and just watching what happens here. So that it's holding, it's trying to hold right now. The internals are looking pretty bullish as well. You see the ADDs at 1800 advanced decline line. Anything over 2000 is usually trend up day. The VIX was at its lows. It's popping back here a little bit, but and then the tick here is trying to hold above the zero line, right? Most of this morning so far, 40 minutes into it, we just spiked below it a little bit. That's on this pullback, but as long as this doesn't start making extreme tick readings, which is right around 1,000, then this should continue a little higher. Again, I don't see it. There may not be a ton of upside in this trade. That's why I was hesitant on taking it, but I'm willing to give it a shot here because my volume setup said to go long. So I look at my important areas on the charts, but then I don't take the trade until I get confirmation in the volume setup. So these zones have to hold. I trailed my stop. I put my stop based on this setup, right? I could have potentially gone an ATR below the sell ice too, but again, if this stops me out, then I'll reassess and move on. And this is what trading is. You put on trades, you have the edge, and you just keep putting them on. You take a loss, you keep putting them on, you keep putting them on. If you know you have an edge, it's just I say this all the time. It's just like a casino, right? I mean, this is one of the main points in the book, Trading in the Zone. Casinos know that certain players are going to get hot in certain days and so on and so forth, but they don't start changing the rules because they have a bad day or a bad session or a bad week or whatever. So if you have the edge, the odds are in your favor, you just keep putting on the trades, right? And we talk about this stuff all the time. We'll go over my P&L a little bit. It's you have the drawdowns and then you have the spikes, right? And that's what trading is. So my point is, if I lose on this trade, I don't like losing. It crushes me when I lose because I'm very competitive, but that's just the nature of trading, right? You find your best areas to trade and you put the trade on. And then you wait and see if it works. All right, some other markets here that I'm watching. One, NASDAQ is pretty close to this important zone as well. This is going to be really, really important what these markets do in these areas. This was this day where the balance here, and this is where this directional conviction started here. And then you can see here, this is where we opened up this day, directional conviction. And again, I draw my zones to the significance. So there's obviously something prior here. Let's see what it does real quick. Obviously, it's not as important now, but you had some stuff over here too. So it's amazing how these zones hold up even after it goes through them and it comes back and then they reassert themselves, right? So this was buying tail directional conviction. This was directional conviction out of here. Served as resistance, resistance, resistance. directional conviction gap, and then once we finally got through there, then it launched, right? And then we came back again, that, and then that. So this is an important zone here. If it can get through there, then we're probably, most likely, I'm not saying today, but I'd say over the next couple days, going to be coming back to this stuff here. This is a really important zone here. So you want to watch this zone and then this zone if we start to rally. We'll definitely get up here today. I mean, we can get up here today too. You never say the market can't keep going, but first and foremost, first order of business is we want to see how it reacts here. All right, so this is holding that zone. You know, if I were to have traded this conservatively, I trade my setups one of two ways. I either take them aggressively, meaning right when it gets outside a 5-minute ATR, I'll get in certain situations. Otherwise, I wait for ATR retest failure. So either way, this looks like I would have potentially been in this trade if this gets a little higher. So this is still showing bullish because it's holding this zone. If we get below this zone, then something's up, and we'll be looking possibly to take some shorts. That's that. Some other markets I want to pay attention to here. Crude, after its walloping the other day, 9% move, whatever this was, $10. These were important zones for back here. You can see we sliced right through here, and today we sliced right back through this one. So when you trade through a zone a bunch of times, you can delete it, right? So I'm going to now delete this zone. It's not important. It was important. I was watching this for potential, for this to potentially stop here and it'll rip right through there, right? So I am now going to delete that because we ripped through it there and then back through there. So that's no longer important because it was stuff from over here as well. This zone is still important. What is this zone? Well, this was major support. We launched from here, came back, retested, launched from here, came back, gap down, it held, launched from here, and then we sliced right through it. So if these are always signs, on this day we caught this short. I didn't catch the full $10 move, but I caught a lot of it in the very early stages of this move. If markets slice right through important zones, that's telling you something's up, right? Like you do not want to be you don't want to be buying right here is what I'm saying. But now we've seen this before in this market actually. I can find another example here. It was very recent because I remember it. Sliced right through. So when we come back here, many times it serves as resistance. So I'm looking here to potentially sell crude, and there was a setup. I haven't drawn it yet because I was getting on the webinar, but I will draw it and I will trade to the short side here because this is a very important zone, and zones are even more important when you take straight beeline moves into them, right? So it's a different story when you move into a zone. So say you build balance just below it, right? Meaning just two-sided trade, guys are placing bets. When you move into a zone that way, the zone's not as strong because you got guys puking that can just rip right through it. This is a different situation. This market has moved, gap from here, straight into here. So all the buying, all the energy was to get here, and now anybody that can read anything about charts can see this is an important area. It could be fading it, and all the buyers were to get to this area, right? So this is a different situation where this is potentially a very good short. So I don't just blindly short. So this is the difference, right? A lot of guys right now trade crude are shorting right here because of this zone. It could work, it may not. But when you layer in your real-time volume, now you have what's happening currently, and you can trade off that, right? And then this is the ultimate edge in the important areas, and that's all. Again, you may have different areas that you trade with. Let's see what this was. This wasn't quite. This is almost a double whammy. So double whammy is the dumb money puke into the smart money, the bigger money house. This is not quite threshold. I will include it in here and just make this as a double whammy zone. So I'm incorporating the stop run and the sell ice here, and I want to see how this reacts here. You can see it's just kind of bouncing around here. Let's check our ATR. 43 ticks. So it's a little over, I round up, so 44 ticks. That's step 2. Let's check our lugs. We're at the red lug, very important. We're at extreme standard deviation of VWAP, very important. When markets get to these extremes, and I'm not even talking about lugs right here, Ludwig levels, I call them lugs, so I don't have to say Ludwig levels 85 times in a day. You have these reversion to the mean. algos. Algos are 85+% of the market. So you want to be aware of where you're at, meaning you don't want to just be buying at levels like this potentially, right? What you want to use to judge if this is going to keep going is if the relative volume is very strong in these areas. If it's not strong, then the algos will take over, right? So this is VWAP. This is one standard deviation, this gray area, and it's called daily value area. And then you start to get into extreme standard deviations. That's 1.5 standard deviations from VWAP. This is 2, right? You can see it got up to 2. I mean, it did hug it, but then we got to red lug. So there's a lot going for this trade to the short side, right? When you get confluence, when things start to line up, those are A+ areas of trade. So I know I have confluence, extreme standard deviation. I know I have red lug. We're not quite at this market profile, but we are in that zone I just showed you guys. Here, right? So there's a lot going for this to stop. And all this is basically another rule of thumb you want to use when you get huge moves, huge directional conviction moves. Many times it'll retest the halfway point of that directional conviction, and that's a stopping point. And it makes sense as far as pretend you're one of these traders. Imagine if you were one of these traders that got run over here and you're holding your breath and you're waiting for a return. It's like a lot of times it's like, okay, it came back a little bit, I'm getting out here, right? And just it's uncanny how often it's about 50% of the directional conviction retest, or it comes back about 50%. So that's all that stuff's confluent with this zone right now. So we're at the red lug. My rule of thumb is I trade off of the red lug aggressively to the short side. So my ATR, what did I say, 42 ticks, 42.3. So I'm going to trade 40. I go a little outside in ATR, so we'll say 48 ticks. We'll make it 5 ticks above that. So the bottom of this zone is 103.26. So I'm going, we'll say 50 ticks is 76. What did I say, 48? So 78, I will short this. 102.78. If I get filled on that, then my stop's going to go 48 ticks above this zone, right? So we talk about this every week. Do not base your stops. I still got guys in my room doing this same nonsense, right? It's like, I don't like to risk.
Stop by NQ 184 contracts.
We're coming up to that zone too. I don't want to risk, 160 ticks or whatever this trade is to, I'll tell you right now what it is. My stop will go, just say 50 ticks. So I'm basically risking to 104. So this is a 120 tick risk trade, right? But the volatility is demanding and the volume setup is demanding, and that's what I risk. You don't want to be putting on trades only risking, you put it on, I only want to risk 20 ticks. Guys, you're going to get algoed out. It's almost a guarantee, right? So you want to be placing your stops away from the volume event and including the ATR, right? So that's how I trade it. Trust me, I don't like risking 120 ticks on trades, but the volatility is demanding that I do that, so I don't just get randomly stopped out on the rotations. And on all markets, this is one of the most rotating, nonsense, manipulated markets. So you want to get your stops away from the zone. So if you have to trade, be risking more, then you need to use something like this. This is inclusive of my room. Join my room, you get this, but this is a risk calculator. So, for my account size, we'll go over this. Is actually increased. We'll look at this in a little bit. If I'm risking, what did I say, 120 ticks? You come down here. For my account size, I could put on 3. 120 ticks, it's 1.2, but that's 120 ticks. All right, so I can put on a 3 lot based on my account size. And you want to really, again, if you're risking more than, if I was only risking 50 ticks, then I could be putting on what? 7 lot, right? And again, if you have a smaller account, say you have an $18,000 account, you don't even have to change anything in here. You just divide this by 10, right? So it's instead of 182, it's 18,200. You're still only risking at most 2% of your account size on any individual trade. So instead of risking 3,600 on the trade, you're risking $364, right? So that's how you want to use this. But you definitely, this is number one in your trading to make sure you don't blow out your account. If you don't follow those rules, risk rules, you're going to blow out your account eventually. I will 100% guarantee it, right? You might get lucky for a while, but you're going to blow it out because you're going to come into a day where you're just getting smushed. And if you're losing a third of your account value on a trade or even in a day, it's going to catch up to you. So
Soybean iceberg buys ES 150 contracts.
So you have to be prepared. So I thought this was actually going to go on this torture treatment per usual when I trade the ES. All right, so this is the stop run here. I could potentially short this now on a retest. I wasn't going to take this aggressively. This is NASDAQ, by the way. Let's draw this zone. Here's your stop run, 190 stops. All right. So remember, when you're drawing these zones, use your cursor, and you want to incorporate all the prices that happen in this price spike. Right? So I want to make sure at least I'm coming down to here. I think that's correct. Oh, the other thing too, crude, I just remembered today's, because there was a holiday, 4th of July on Monday, the crude number is today, so I probably don't want to put that trade on so close to the number. Let's see, it's at, I think it's at 9:30. It's at 10 o'clock, so we got some time, so I'll put that on. If the number was in 9 minutes, probably wouldn't put that on, but I'll wait. All right, so this is clearly a full ATR. This is a Dumb and Dumber setup now, right? Dumb money puke. Stop runs are usually dumb money. No hold follow through, meaning the big money didn't come on behind it and continue to push it. Instant failure, right? So there's one of two ways to trade this. You can get in aggressively just outside an ATR, or you can wait for the retest. In this situation, I wait for the retest because we are above. Actually, I think I could have taken this aggressively because we're at the red lug, and yes, I could have, so I just missed a trade here. So remember this is what I'm doing in crude, right? I take my trades aggressively short. I know we're above the yellow lug, but if we're at the red lug and I get a signal, I take the trade aggressively. This is a really important area for NASDAQ. So we saw that zone, we're not quite there, but this needs to hold inside this market profile composite. This gets back out of here, we're gonna do one of these, right? So I should have already been short this
Soybean iceberg
trade.
sells ES 159 contracts.
Soybeans here in a second. It's one of my best markets. ATR in here is 24.3, so I should have been in this just outside an ATR. Bottom of this zone was 47, so 30 points would have been 17. I would have been right around 20. That's right here. So I'm going to put this on actually right now. I got lucky it came back potentially. Let's see if I can get it up there. Every time I do this, I won't touch the price. I'm going to sell off. There you go. All right. So this is actually not a bad hedge now because I'm long ES, right? So I don't trade like that. It just happens to be that way. But I'm fine with that. So now I'm filled there. Now my stop goes again to 24.3. So 30 points above here puts me to 82.50. We'll go a little inside that. So we'll go 80.50. 80.25. That's fine. So I go a little bit outside of an ATR. So I'm risking now on this trade, 60 points. And that's fine because I think if this market gets rolling to the downside, I'm going to be making at least twice that, probably more. So we'll see. So now I have opposing positions on, so that kind of is no fun, but it is what it is. Like I don't skip trades in other markets if the volume setup is telling me to do something, right? So even if I get stopped out of this trade now, NASDAQ will most likely be moving in my favor, and then we ride that one. Hopefully I don't get stopped out of both ways. But, any questions, Sam, before I continue? Let's look at soybeans here too.
Yeah, I've got a couple of questions. You've been talking about one of my favorite topics actually, which is risk management and how kind of important that is. You also kind of spoke about your approach of just keep putting on the trades and the casino analogy. I was just wondering, like, besides the 2% risk calculator you use and the way you account for volatility as well, is there any other kind of risk management processes that you kind of follow to kind of ensure you can just stay in the game? Like daily losses or psychological analysis of yourself or anything like that?
Yeah, say the last part again. I had the copper alert firing off. I heard most of that. What was the last part? Yeah,
like if you have daily loss limits, if you stay away during news events, or if you have if you monitor your own psychological state, like if you're getting tilted, or do you kind of walk away, or do you have a system in place to ensure that?
Yeah, absolutely. We talk about this all the time too in here and in my room. Very important. So first of all, we were talking about, you want to be risking about 1.5 to 2% of your account size on each trade, not any more than that. For the day, you want to make it about, you never should be losing more than 5 to 6% of your account size, right? So you need to have things in place with your broker because, again, I love the analogy, Mike Tyson, everyone has a plan till they get punched in the mouth. Well, everyone has a plan. Well, yeah, if I hit my drop dead today, if I lose $1,000, I am done, right? Yeah, it's all sunshine and rainbows when you're not on, like you said, on tilt and emotional and pissed. Most traders are very competitive, right? And it doesn't feel good to just be like, oh golly gee willikers, you guys got me today. I'll be back tomorrow. Most guys are like, F that. I'm trading. I'm gonna trade with another $1,000 today. F that. I'm gonna trade with another $1,000. All of a sudden, you lose 33% of your account value, right? Some of my room did it the other day, which I was quite shocked after all I do is talk about it. But the point is, it happens, right? It happens to the best of us. You guys have heard my stories in here. If you've been on any of my webinars, in 2 different days, back to back, Fridays in 1 month period that I lost $800,000, 2 different days. That's $1.6 million. My drop dead was supposed to be
151
$100,000. So I had that stop, and then my risk manager was supposed to stop me at that point too. But at that point in my career, I had shown, because a lot of times, in trading firms or my trading firm, like you would go on tilt and, they just cut you off. You couldn't put a trade on. And then I would settle down. I call them up. I call the owner, say, hey, just give me another 50 grand. If I lose that, I'll just leave for the day. And then it gave me a little bit more, rope to hang myself. But a lot of days I'd come back, right? Let's get this over here just so we can watch a little, now we're going to rally, of course, because I'm short the NASDAQ, but that's fine. Again, I took this trade for a reason. So many times I would make a comeback, right? So it got to the point where I would hit my $100,000 loss limit and they wouldn't even call me. I mean, they would call me, they wouldn't shut me off automatically. They'd say, hey, are you all right? And of course I would just lie and say, oh yeah, I'm great. And I would continue to, get killed. So 2 different days, if I would have just stopped myself at the 100,000, which was impossible, like I said, yeah, I had good intentions, but once you get under the gun and you're on tilt, you would be amazed. And I'm sure many traders on here, probably most, can relate to this. You're not even the same person. You're just like, you're so pissed off and you're just seeing red and you're just not, every decision you make is wrong. And then you get killed, you blow out. Again, I lost 800,000, almost $1 million in one day. And it wasn't even in a day. It was like literally in like 20 minutes, right? And then you wake up the next day and you're just like, who was that person? Like, what was I thinking? What was I looking at here to hold that position? So on and so forth, right? So back to everybody has a plan, you get punched in the mouth. You have to have that in place before that happens, or you're going to blow out your account. So, again, you don't buy, insurance for your car after you get in an accident, or a house insurance after you have a fire. You do it beforehand. Do the same thing with your risk control. Call your broker, say, I want to have, it should be about 5% of your risk in a day. So if you say you have a $50,000 account, you should have a $2,500 stop where they literally just shut you off. If your broker says we don't provide that, find another broker. There's plenty of competition out there. First of all, it amazes me when I hear some guys say my broker doesn't do that. Guys, brokers are in money or in business to make commission, to make your money. And if you blow out, they're not making money off you anymore. So for brokers not to be doing that, that's just either laziness or they just don't want to concern themselves, but find another broker, right? So get that in place before you go on tilt, because you're going to have a day that you go on tilt. It's 100%, right? And there's going to be a day, maybe you do it 90% of the time, where you can stop yourself out on your own. There's going to come a day where you just lose your mind and you're going to blow out your account. I'm telling you, listen, take it from me. If I just would have been able to stop myself, and or my trading firm could have stopped me, I would have an extra $1.6 million in my bank account. So, or 1.4 million, because I at least would have lost 100,000 on those days. So hopefully that answers the question. Did I answer everything you were asking, Sam?
Yeah, no, that was great.
I think you asked them.
Yeah, completely relate to that. Good stuff. We've got a couple more questions as well. When you're ready, just let me know.
Yeah, there's just being tortured here.
There's a couple. Someone's asking if they can have access to the risk return spreadsheet, or is that shareable? how they get that?
That is inclusive to my room. A lot of traders have worked on. There's different variations in my room, but that is one of the perks of being a room member. If not, you can potentially Google it and find it somewhere else. But that's if you're a member of my room, that's what you get. That's like one of the perks of being a member of my room.
Okay, and there's someone else here
Nat
asking
gas iceberg by NG.
for the link to the
150
mentioned
contracts.
website. I think it might be in the lugs site.
To what website?
The Ludwig levels. Look.
Oh yeah, yeah. I'll just show you guys. So this is what you want to do here, right? Just go to ludwiglevels.com. Her website's from 1982. I make fun of her all the time. She says I have important things to do than build my website up, so that's fine. As long as we get the lugs, I don't care what her website looks like. So you go over here, do the free 3-day trial, name, I'll fill all this. In the comment box, just say Bookmap webinar, Scott Bookmap webinar, Scott Pulsini, whatever you want to put, and then you'll get special pricing for you guys.
Sells ES 150 contracts.
And then say what where would you like them? Either Ninja Trader, I use mine on Sierra, or you can do Ninja Trader. She's coming up with. Sorry guys, a lot of stuff's firing off here, which I'll go to in a second. Especially nat gas, we've caught some major trades in that market lately, and you can see this coming in right now. Anyway, she's got other platforms she's building out. One of them is, if you can see here, is actually she's putting them on Bookmap. I have them on here just to test them out. These are actually a little different than the regular lugs. She's got some different computations because this is a beta thing. I personally will not probably be using these on my book. There's just too much on my chart already. It gives me a headache and it's confusing, and I just like a clean version, so I use mine, on the Sierra chart. But she's coming up. They're going to be available on Bookmap here shortly. Actually, members of my room get access to this beta too, so that's another perk. If you come in the room, then just say, hey, can I get the Bookmap beta Ludwig levels? But that's how you do that. All right, so like I said, I knew the minute I put on this NASDAQ short, the market would start rallying. So again, I'm not perfectly hedged, but it is what it is. This area is very sticky, so it could go either way here. And most times I would just say, I'm going to pass in this area because like we've talked about, but we're not quite there. So that's why I was okay with putting this on. I still think this is going to be a major, major, major inflection point for these markets. If this can get through here, then we're going to rip, or we can do that. We're far enough now from all of this structure. So this was a good example. Well, there was no zone here, but say there was a zone here, right? So this was a balanced area. We even talked about in my room this day. This was, I think, Monday or Friday last week. We had a failed breakout, kind of like we had here, right? And you see what the market did, right? So when you have failed breakouts, the market should just do that. Well, something was up when this thing just held here and then came back above this high volume node of this balance. I was telling my room, this thing's going to rip now, or it should, because what it should have done, it did not. And many, many times when it goes the other way, that's when you get the big move, and that's exactly what happened here. So my point is, it's not like this zone here is right in front of this balance where you're worried about guys puking. This is the puke over a couple days. So now this market can do anything here. I'm not extremely bullish anymore. I was bullish when it did this, got back through here and out through here, and when it broke out of this balance, I was very bullish. Now we're far enough from this stuff that this can do anything. This may just, form new balance, and that's why I'm watching this zone very carefully. This is going to be very telltale what happens in this for again, this one and here. This is NASDAQ, we just talked about that, and then Russell, RTY, same thing. Looks like we're actually into that zone. So this is, so this is stuff over here. You had directional conviction, you had directional conviction that way, we got through it, kind of held, and then we ripped right through it, and now we're back. So this, all three markets, this is going to either do this or it's going to rip this way. So we just got to see, this is almost through this zone here, and Russell has been leading the last 6 months to a year. So it, if this can get up through this first, then that maybe signifying all these other markets are going to rip through those important zones as well. So as nothing happens in here, let's see, let's go to our, this is why you want to be watching other markets too, guys, when you're the natural gas number come out at 9:30? Yeah, so natural gas just came out, so that comes out at its normal time on even holiday weeks. This is not huge, and this is a really big, see this buy ice here. My threshold's 150, but not right after a number. I want to see, elevated volume. So nothing's really going on here. I'm not going to draw this zone.
315 contracts.
What was that? Oh, corn. I'm watching corn now too, guys, so take a look at that possibly. Anyway, I'm not drawing anything here. Natural gas, I'll wait. The number just came out. Crude, I'm about to cancel this short. If this gets an ATR above here, this short setup is disqualified. So ATR is 39.7. You can see it down here. It just popped up to 40.5 now. You can see they're buying crude. This is tick strike. It's another thing you guys can have. They're on my website. This is very helpful. It gets very annoying sometimes because it's not fun to listen to your position going against you. But this is very important to find out. If you're not staring at a market, knowing there's big buying or selling going off. And this basically is an algorithm that tells you the size of the orders and the speed of the orders coming through. So it's very helpful. It gets really annoying. I call it waterboarding. When it's going against your position, it's literally like you get all your senses tickled. It's not fun, but when it's going for you, it's a blast. As you saw last week, I think we had a nice position on them that it was going crazy in our direction. Anyway, ATR is 42, I think I said. The top of the zone is 103.50, so if this touched 92, it did. So you can see these algos, when it gets an ATR away from this is why I go outside an ATR when I enter, because many times when you get the volume event, when you get an ATR away from that volume event, these algos snap it right back. So the point is, this is now actually a bullish setup, because we never got the ATR below, right? But what I was waiting for, where I wasn't going to go aggressively long here, was because we were still at that red lug. But now we should have new lugs in here. Let's take a look. Not quite yet. Let's refresh this. Sometimes on Sierra you got to refresh it. It's a little. Again, Sierra is a little cheaper charting platform, and the reason is because you got to. I mean, it's very reliable, but you got to do everything yourself, and I mean everything. So you go to build chart, you got to build your own charts. There's nothing like prepackaged, and that there's a reason it's $35 a month, right? So anyway, we haven't built new lugs yet. We are coming into an important area here where this could fail. We talked about the zone. We don't have new lugs, and the number's coming out in a little over 20 minutes, so I'm not going to take this long trade.
155 contracts.
Of course, stuff just keeps coming in here to tempt me, so this is canceled. Let's draw this real quick. You can see the sell ice just came in. This is the sweeps indicator. This is if you have Global Plus, which I think is well worth. You guys should be getting both Global Plus because all the things they have on there. They have the sweeps indicator. They have the strength level. This is showing you synthetic icebergs. So I'm not going to get into all that today, but I know I've been talking about my new course. I'm going to have it done. I'm going on vacation on July 18th for a week. I'm actually beat down at the end of the day. Let's see here. I'm trying to find the. That's not it. This is it here. So you can see all the stuff that this is going to go over, right? This is going to be one of the sheets where you're going to have the SI tracker. This is the sub chart. Then we'll go over the on chart, strength level. That's the synthetic iceberg, sweeps, liquidity tracker. So that's all going to be in the new course. I will have that done by the time I go on vacation. I don't care if I have to sit here for 28 hours straight. I'm going to finish it. So that'll be available. If you purchased my prior course, you'll get a deep discount. I'll send out a mass email on that. And if you're a member of my room, active member of my room, when I release the new course and you bought the course prior, then you'll get the course for free. So, I don't expect guys that just bought it to turn around and have to pay for another course, but it is going to be way more involved than my first course, and it's going to talk about everything I'm doing today, right? Like the drawing the zones, the ATR, all the stuff behind there. It's going to be very in-depth, step by step. So I will have that done by the 18th, I promise. It's just, I've got so much going on and I just don't get to it. So here's your new lugs and crude. So even if this, you know, we can draw this setup, but I would now wait for a retest failure. There's that ice zone, that threshold's 150 in here. That's another thing the course will give you is thresholds for each market. I'm going to add some new markets like soybean oil and 10-year notes and stuff like that as well for you guys that trade that stuff. So that's that zone. We have new lugs. That's definitely an ATR. It's not definitely an ATR. It's not an ATR. We got to see 42 ticks above here. Again, I'm probably not going to trade this zone because the number's coming out. And we're not officially through that other zone that I was showing you guys. Let's see here. This is a good equity trade, by the way, minus the good part. So again, this is why you want to be watching other markets. So when this sucks, you're not forcing trades, right? You're just like, okay, screw you, ES. I'll go trade crude, or I'll go trade natural gas, or soybeans, or corn. It's all the same. It doesn't matter. It's a volume. It doesn't matter what futures market you're trading, as long as you know the threshold, meaning important volume to trade off of. It's all the same stuff. That's why it works across the board. So you can see we've gotten through this zone, so that is definitely bullish. So these zones are the next step up. It'd be pretty amazing if we could retrace this entire sell-off, but this is a very, 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 very important zone, right? So this was from other stuff over here. What did I draw this? I was looking at this yesterday. I can't remember why I drew this. I think this was yeah, we gapped up this day, but this wasn't really directional conviction crazy, but this is definitely where this started. This is a really important zone, probably 107 to 108. Let's see what that was. Yeah, 107. So if we do rip up there, watch this zone, because I will be shocked if it can rip straight through there, especially if it keeps going today. So we'll see. Maybe into the number we'll get an awesome trade. So again, being tortured, nothing doing here. You can see how, guys, this is why these markets react here. This was a volume event. You can see, here's your retest, failed again. Let's make another attempt. Like, this could rip up and stop me out, but again, I'm long ES, so it is what it is. Let's see what's going on. Heard a soybean. Any other questions, Sam, right now?
Yeah, we've got a couple here. They might be Bruce questions though, but maybe you can help. Do we have the option to add iceberg stop volume graph on TOS? I mean, as far as I'm concerned, I think the TOS version of Bookmap is a kind of trimmed down version, and I'm not sure if it's possible, but I don't know if you know any different, Scott.
I have no idea. Yeah, I heard that the Thinkorswim version is the bare bones minimum. I've never used it, but I don't think you can.
Yep.
So, and again, you want so if you go, this is all my website, guys. I tell you guys this every week. There's discounts to everything on here, right? Everything I use is all right here. So Bookmap, click on that. You get discounts you want the Global Plus to get all those other, in my opinion, it's maybe I think it's like $30-40 more a month or something. But these are pretty deep discounts. These are like half for the first 3 months, half for the first year for the annual. There's no discounts on the Global Lifetime because of it's already deeply discounted, but you get discounts to that and all this other stuff, right? There's the Apex funding that I use, that the room's using. You should be definitely using this if you're new, you're trying to learn, or you just want to be backed by, you don't want to be risking your own money, which is very, very smart, right? Again, I've done this personally to make sure it was legit. They're completely legit. We did a webinar. It's pinned on my my Twitter page. Again, I'll just go through here because I get all these questions, and this is what I'm talking about. Let's see. That's I always forget how to do this. So that's this here. You can watch this webinar I did with them. I actually qualified myself to make sure it was legit, and they've had me funded and they had me trading within a couple hours, had me set up. So again, you can watch the webinar, but I'm getting these emails like, well, when you qualify, they keep you on the paper trading. He goes over that, right? Because most guys, they're trying to protect themselves, but they do pay you, right? So, once you go live, so say you qualify for the account, and they have all these different options. So my personal opinion, when I looked at this, I thought, got like 4 accounts with them because I'm confusing myself with 25 different accounts. But anyway, come down here, here's your options, right? So I looked at this, I did the 150 on all across the board. I've got like 4 of them going, right? So a couple of them doing grains only. It's just a good way to trade where you're not risking your own money, right? And a couple of them are for other people and stuff like that. I don't need to get into that stuff. But the point is, when I looked at this, I'm like, well, this one looks the best because you have a profit goal of $9,000 over 10. You got to trade a minimum of 10 trading days. And if you make 9 grand, you're funded. Okay. Your trailing threshold's 5,000. This is all covered in the webinar. I'm not going to get it deep into this, but this is very important because this is from your high point of your P&L. So even if you don't exit your position and you say you get up like $7,500 and then you exit the position, you only have 4,000. Well, it's counting you from the $7,500. It makes it a lot more difficult. You got to. So my first 2 times in this thing, I actually was profitable, but I pulled back the 5,000 from my high and I got knocked out. So I had to redo it. I think it's $80 to redo it, right? And then I qualified. I did that. My original reason for doing this was for members of my room and you guys to show that this is a legitimate funding company. And I've heard it from another veteran of he's the one who pointed me to this in the first place and said it was legitimate. So I did it myself. So the point is, I think this is the best one because you can see here, for the 150,000, your trailing threshold is 5,000. Well, if you go 200, you only get an extra. You got to make another 6 grand, but you only get $1,500 more in the trailing threshold. And then you go to the 300, it's 20,000. It costs a lot more money. It's to do it 20,000, and you only get a $7,500 trailing threshold. So these do not equate, in my opinion. So that as far as risk reward and what you're getting to do the 300, as far as the pullback and stuff like that. So I think this is the sweet spot. I didn't mean to get too deep into this, but watch the video. It's on my Twitter right here. It's pinned, and you can see it. I forgot what I was getting at there, but anyway, click on this, and the code is Pulsini50, and you get 50%. Actually, it's 80% off right now until I think it's the 10th. Trader Sync. This is what I use to journal. Again, I'm going over this, guys, because there's absolutely nothing going on in the markets right now, so I don't think I'm missing anything because it's literally like watching paint dry. That's this right here. So important you guys use this. Again, this is what I'm talking about, being so busy. Like I have not. It's been a while since I've gone in here and tracked my trades. This is going to take me a year to go back and do all my screenshots and stuff. But the point is, you want to keep.
Stop by NQ 150 contracts.
Right, that's in the same zone. I'll be there in a second. But you want to keep track of your trades, and we talk about this all the time, like the bad times a day and how I've given away so much money from the 10 to 12 central time period. But anyway, this is what I was saying. I need to increase my risk calculator based on this new. This thing's incredible, and you get discounts to that on my website. Just click on the link. Hold on here. So the current P&L is 84.6, right? So then you go into your little risk calculator. What do I do with it? It's not there. I don't know what I did with it now. Wait, here it is. So I gotta up this. 186. 184. 184.6. What does it say? 185. See, we'll watch these contracts trade. This is how you build your account. You just gradually add contracts as you increase your account size. All right, so let's see what's going on here. Another stop run in NASDAQ, still not stopped out. These markets absolutely suck right now. This is the sweeps indicator. You can see there were 560 sweeps, but that was part of the stop run, right? Where you want to pay attention to this, I'll cover this in the course as well, is when you're getting these without stop runs. You want to pay attention, especially, when they get to this kind of size. But I will draw this. Actually, what I'm going to do is I'm just going to make this zone bigger because it's pretty much the same area. I'm going to leave my stop where it is because if this thing gets rolling, this is going to be ripping. So I'll just stop out where it was, but you can trade off of this new setup as well. I'm not going to add to this because it's in the same exact zone, but that's that. Let's check our sweet ES trade. That's done absolutely nothing. All right, I got almost a round of golf at TPC here. Maybe I should get out and go play golf right now since these markets suck. Right, so still alive in there. Again, I'm short NASDAQ though, so one of those traders is going to be a loser most likely. Hopefully not both of them. Soybeans, this is actually drawable here. 150 is my threshold. I like to see closer to 200, but this is my best market too, which is unbelievable to me. I've made the most money in this market. So this is what I'm trying to tell you guys. This stuff works in any market because the driver of trading is volume. And if you know how to read the volume and know important areas, you have the edge, right? So that's step one. Let's check out our ATR in here. ATR is 3.88. You can see right there in the middle of that box. So 4 points, I round up. So the bottom of this zone was 67.5. There's 4 points. So that's an ATR. I should possibly be getting in this, could possibly be getting in this aggressively. Let's see what our lugs look like. And this one I would not get in aggressively because of the way I trade these. If we're above the yellow lug, I don't take shorts aggressively. I wait for ATR retest failure. So now on that zone, particular zone, I will short it, but now I need to see ATR retest failure. We just got the ATR, 5-minute ATR. Now if this retest fails, I will go short just outside the ATR. My stop will go an ATR above here, just outside an ATR above. So it looks like I'll be risking about 13 cents total in this trade. So then I go to my risk calculator, knowing that. Again, it's the same point value as ES, so you just can use ES. I say 13 points. I can put on 6 lots based on my account size and only risking 2% of that account size. All right, so this is tick strike again. So anyway, this is all on my site, guys. Utilize this. It's all discount style. Tick strike, not spot gamma, not rhythmic, but all this stuff is on here. And that is that. Any questions about any of that stuff? Or anything?
Yeah, just a couple to catch up with here. Alec in the Discord chat, thank you. He's confirmed that you can't get the icebergs or stops on the TOS, the bare bones version of Bookmap, which is kind of what we thought.
You can or cannot?
You cannot.
Okay.
It's my English accent.
All right, before you come up with any other questions, so this is a really important area. Like I said, in ES, we're coming up to this zone. Couple things. I will be out of this trade in a heartbeat here. So 38.97-ish. This is an important spot gamma level. Let's see where we're at here. We're right here. This is 3,900. I'm going to give this a chance to blow through here. But this is really this zone, this important level. We looked at the market profile. This is what the zone looks like on a 5-minute. It carries over. There's a lot of stuff where this could stop right here. So I'm watching this very closely. If this starts to pull back here at all, I'm probably going to get out at least half and then see if we can keep an eye on this here. Nasdaq is still not stopped out either. So let's see what happens. Let's see if we can get. This is another reason why, not just to know when stuff's firing off. If you get to important levels and none of these are firing off max, so I have these all set at 11. The levels are from each 1 and 15. So 1's the most sensitive. 15's the where it's extreme, most extreme. I have mine set at 11 because I only want to know when, like you can see, they're buying Russell aggressively, right? And Russell's usually, again, it's been the leader, so that's important to know too, right? But my point is, if you get to important levels and these things are silent, you might be looking to get out of some of your trade, some of your position. But see how this is still firing off here. I find it funny that they're selling it and this thing's going off, but this is definitely going up. Let's see if we can plow through here. Again, I'm most likely going to get stopped out of this NASDAQ trade, but I didn't do anything wrong there. I followed my rules, and that's just, again, you just keep putting on the trades. Probably, I'm going to give this a couple more seconds. If this can't plow through this spot gamma level, again, this is 3,900 in the SPX, which is equivalent to 39.40. You see how it's struggling right here. Well, I can guarantee you the second I get out of half of these, that's going to rip, but I'm trying to be prudent here. All All right, crude numbers in 5 minutes, by the way.
Forecast minus 1 spot 55
Come on.
million.
All right, I'm going to get out of 2 there.
2 million. So what the range is seen at spot 084 million minus.
This market sucked, by the way. All right, so I got out of 2. Let me get out of my other accounts as well. Hold on 1 second here. I always forget to get out of my other accounts, and I look up and the thing comes back 30 points. I'm like, what am I doing? So that's find one of my Apex puppies. All right. All right, any other questions, Sam? We'll keep this here for the number.
Yep. Actually, Emil makes a good point. If you're watching this on YouTube and you're finding this valuable, please smash that like button. It gives us good feedback. It helps us shape our future content. So would appreciate that. MK is asking, is there do we have to purchase data separately for Global Plus packages to trade stocks and futures? I believe you do, yes. You have to not only purchase the Global Plus package, you also have to add the DX feed for stocks, data package on top of that, or the rhythmic data package for futures.
Right. Well, you definitely you have to have rhythmic. Again, I go. This will also be in my course as well if you end up getting the course. But you need rhythmic data feed if you go to the Bookmap marketplace. Go here. So you need, to get the SI tracker, stop iceberg indicator tracker. It's in the, where's it at here? MBO bundle, right? So you want the MBO bundle, and that gives you, you can see here, stops icebergs subchart. That's the spikes. That's this thing down here. It gives you also on chart, which helps you, see if it's one house and draw your zones better as well. Liquidity tracker. So again, I'm covering all this in the course as well. But you get all this. So you got to get this per month, and then you need the rhythmic. So you can get this through Bookmap. So there's questions about this too, right? So you want to go to, depending on what you want to trade, I highly recommend you watch other markets besides just the crappy ES every day, which most traders do for some reason. I'll never understand why. Again, you want to get, so if you get just CME products, so Nasdaq, Nasdaq, RTY, ES, that's only $39 a month for the data feed. If you want all of these, so you got CBOT, so you got the grains, bonds in there. NYMEX is the crude, natural gas, COMEX, gold, silver. If you click CME bundle, you get all of these, right? And then pro or non-pro, most of you guys are non-pros. You want to pick that. If not, it gets a little ridiculous, as you can see. If you have multiple connections, they're going to charge you pro through other brokers and stuff. You're going to get charged pro, so be careful there. And I'm not going to get into that stuff, but this is what you want to get. You have to have the rhythmic data. Or else you cannot power. They're the only data provider that disseminates the CME MBO data, and that's the enhanced data that shows the stops and the icebergs. So, did I just get a yeah? So we got a retest. So I'm going to be short here. Can't believe I just missed this trade. What am I doing? All right, that's actually almost perfect entry anyway. Hold on a second. I got to put these on my other accounts. Any other questions while I'm doing this, Sam? Fire away.
Okay. Jill asks, is there a difference between the Bookmap versions that Scott uses and that Tom uses? I believe they're both using the same Global Plus. They may have different add-ons, but it is quite customizable. They may have their heat map set up differently, but I believe in terms of the software packages is the same. It's the Global Plus package.
On Dice 2 Iceberg by ZB, 513 contracts.
1 second here.
And Lou asks, do you use Spot Gamma at all?
Oh, absolutely. Hold on 1 second here. Sorry guys, I have all these different accounts that I'm trying to, it's hard to do webinars and then
10 seconds.
crude numbers in 10 seconds, obviously. I got that. Hold on. Do one more thing here.
Spot 235 million, 8 spots.
Crude stocks LCO, 273 contracts.
Why did I just get filled on?
0 million. In the distillers inventories, -1 spot 66 million, -1 spot 66 million. So that is a draw on the forecast of 1 million. And the gasoline inventories, -2 spot 497 million.
Forgot to delete that crude. That's great. So I put that crude trade on there, remember I deleted it in here? Well, I forgot to delete it in my other account. This is what happens when I'm doing these webinars, I forget to do stuff. Forget to delete orders and stuff. One second here. This is just a major pain. Sorry guys. I've got different accounts on different computers, so it just takes me a while to do all this stuff. All right. So what was the question? It's Tom. I have no idea what Tom uses. I think it's the same stuff, but if he's using the SI indicator, then you have to have the rhythmic data, and you don't need the global plus, but I'm telling you, it's worth it to get the sweeps indicator. It's also the absorption indicator. I don't have that on here right now. And then you also get over here, the strength level. That's you can see synthetic icebergs as well. And so there's native and synthetic. Synthetic is guys doing it themselves. Native are through the CME exchange. It's a lot more expensive to do it yourself. So that's why most big firms use they just use the native, and that gives us the advantage of seeing what they're doing. Right. All right, so that was the proper exit so far of at least two of those. You can see it's right. So this is spot gamma. Where we're at the spot gamma, that's spot gamma. All right, I use that, and then I also use this. I keep an eye on this hero indicator. They have it for Bookmap, and they have it also standalone. Where did I put it? This right here. Let's refresh this. So this is just showing you real-time options flow. This is not red light, green light. I see they have their own room too, guys. If you know that, I mean, in this book map, if you go over here, they got the hero room. Where's that? It's right here. Click on hero. I'm not going to click on it right now, so I can't find my way back. But it's not red light, green light. But many times when there's huge divergences, that's when the market stops, right? So you can see here. Let's check this out. So like this is a divergence, right? It's not nutty, but this is the market black. This is the options. So again, you can do total, just puts and calls. Again, I am not an options expert. Go to his website. Click on the banner on my site. You can learn all about it. He gets very, very, very detailed technical. Some people love it. I use it in the very basic sense. I like to see divergences, and I like to know where the levels are. These are very important because these are where options dealers are some of the biggest futures traders in the market because they have to hedge their options positions. So you want to know where the concentrated options positions are to know if dealers are going to be fading these areas. So these just work like any other support and resistance, right? Right now, it was resistance. If it gets above there, then it's support, right? So that's what you want to keep an eye on. That's what I use them for. I use them in a very basic sense, and that's all I need. I don't need to complicate my trading by wondering, and you guys do this all the time, even with the stop iceberg indicator. You're like, what are they doing there? Are they hedging? Are they getting out of position? It doesn't matter what they're doing, why they're doing it. You're never going to know unless you are God Almighty. You are not going to know what they're doing here. What you need to know is this is a concentrated volume area where I'm drawing these zones, and there's two sides to the trade. So somebody's caught, somebody's not. Whoever's caught usually puke and lump, right? So that's what you need to know. You don't need to know the whys. You need to know the whats. The more you try to explain every move in here, the worse you're going to do. The simpler you make it, the better you're going to do. I talk about this all the time. When I made millions and millions and millions of dollars trading, all I used was this. I stared at this. Is that technical? Does it get much more simple? No. Do I do it anymore? No, because it can't be done anymore because this is all algos now. When I was doing it, it wasn't all algos. The orders were real. So if you saw 3,000 in the order book up here, and it came up here and I would start selling in front of it, I knew if I sold 1,000, I knew if I was wrong, I could turn around and buy right in that 3,000 and get the hell out of my position. Nowadays, most of the stuff isn't real. You'll see 600 many times. I mean, the longer it's been in here, the more real it is. But you'll see 600, it'll get up here and it'll be a 6 lot. You're like, what happened to liquidity? So you can't lean on anything. See, that's why I can't scalp anymore. Trust me, I would love to scalp. It can't be done unless you're an algo. I'm not an algo. I'm a click trader. So I had to resort to becoming longer term. Again, still not long term, still a daily trader, intraday trader. But that's where this all comes into play, right? Forgot what I was going there with that, but all right, let's see if this can plow through here. Again, I'm probably gonna get stopped out of this Nasdaq trade if it does, but this was the correct trade, and I'm still not stopped out. So either way, these markets absolutely suck. It's the way it goes. That's why you want to be watching other markets. I'm assuming this is going to push through here. I mean, it's just like sitting at this level, so we'll see. Change the stop right here. See where we are in all these lugs as well. So red lug is until 39.12. You can see we're getting back in here. This is why I was hesitant before, but now we're getting back in here. So now if I get a new long signal, I will take it. I'll get back in. I'll put more on. I'll not get back in. I still have 2 on, but I will add to it, and I'll play that as my target. And I'm pretty sure that's pretty close to this point of control of this composite value area. Right there, pretty close. Then a couple points, a few points. So my point is we're starting to accept into this market profile composite. That's very important as well. Try to get out, couldn't do it. You always want to come up with stories if you're using these market profile composites, which you should be, because they're very, very powerful on top of everything else I'm using. And I'm not using that many things, very simplistic stuff. But if you accept in here, the tendency is to get to the other side. It should get to the other side. If something happens and it doesn't, and it gets back out of here, well, then the big move is going to be the other way, right? So you're always trading on what should happen, but if something happens where it doesn't happen, then the opposing move is usually the big move, right? So that's right now. This should get up to here today, at least red lug. Right? If this fails and gets back out of here, something's up. We're probably going to have a nice sell-off. But right now, you got to be leaning bullish. This stuff's confirming it too. Right? Let's see what happened in crude there. I'm going to delete all these prior zones because a new event has occurred. So you got to be careful trading prior areas after something new happens. Meaning, things change now that the number came out. So these prior zones are probably not that important. And I'll just wait for something new. You can see this did come in right after the number. There's a nice little puke there. 225. I will draw that. So let's. What am I doing here? Let's delete these zones. Let's draw this. Let's get this out of here for right now. So these are the sweeps. This is one of the things you get. So you can see this sweep was not part of a stop run. It wasn't the major part of it. That's important to know. So a sweep is just, so the white, I just use white and black because I have enough colors on this chart. But you can see the bubbles are the market orders. So somebody just swept down, and the white circles are responsive buyers, meaning resting buy orders that just got run over here. That's what the sweep shows you. Very important, especially when you start to see outsized sweeps. So that was not a stop run, and this next one was. So out of these sweeps, there's 331st sweeps, 228 of them were stops, and that's what this is showing you. It's showing 226. It's usually right around, right? And another reason why the sweep indicator from the Global Plus is good, it helps you draw your zones, because a lot of times you can see right where the big move started, right? Let's draw that. Change my stop runs to white or yellow, so I know what they are when I just glance at my chart. So let's see what setup this is. One of my 6 distinct setups. That's what my courses cover. So ATR to check is, do we get an ATR out of here? ATR is up to 52, 52.2, so 53. Top of the zone was 103.20. Did we get 53 ticks out of here? Looks like we did. Yeah, so 73? Actually, 70 was the ATR. And that got just above an ATR and pulled back because these algos know where these volume events happen, and that will snap it back many times at the ATR. That's why I go outside of an ATR to enter trades now. You guys remember, I used to go because I was trying to save some ticks, which just killed me. I'd be like, okay, 70% an ATR out of the zone I'm getting in. And then the market would get right here, tick me, and then come back. Then I would go 80%, then I went 90%, then I went 100%, and I kept getting ticked. Now I go just outside, and it's working out much, much better. So I go just out. So if the ATR is 53, put your stock, like get into the trade at 54, 55. You know, just outside of an ATR is sufficient in most cases. So this did get a full ATR out of here. It didn't retest the zone yet. Let's see if we could be aggressive on this trade alongside. Now we look at our lugs. This is how I determine if I'm going to be aggressive or not. We are below the yellow lug. So remember what I told you guys earlier, lug-wise, when you're coming up with your story, we built new lugs. This is prior red. The market, if this is completely bullish, should hold directional yellow. Last case scenario, prior red. And you can see it did not, and now we're getting back below there. This looks like a bullish or bearish. It looks like we're coming down to a minimum back to the blue. We also know, I think that failed back into the zone. But you can see it barely poked us out of the zone. That's what I was telling you guys. This zone is really important. It tried. We're back in here. If this gets back outside here, we're probably going to retest or retake this entire move, would be my guess. Right? So there's a lot of stuff pointing to the bearish. The problem is this current setup has already confirmed itself as a bullish setup. It doesn't mean it's not going to go lower. It just means I would not take a short off of this now because we've got an ATR above here. That's just the way I trade. You can trade it however you want. I say it every webinar. This is the science. The art is how you trade this. I trade these in distinct ways because I've watched thousands and thousands and thousands and thousands of these over 3 years, and I know what the tendencies are, right? That's the point of getting the course and learning this stuff. And for me, where you don't have to watch thousands and thousands and thousands of them and just know what you're doing, you have the edge, right? But I know if the market is able to push away a full ATR, it's not a good trade the other way, per se, for this exact setup. So I won't get short on this one, but trust me, if this starts moving down, you're going to get a new setup and trade off of that. Will I go long here? I would, because if we went like here's your retest. If this gets back up here, I'll give this a shot because the volume. I know that zone is important, but we're right at the top of it, and the volume is telling me potentially to take the long. So we didn't retest this though, so I'm going to wait for the full retest. A full retest in crude, if it gets within, 2 ticks, that's considered a retest. This did not. This was within, what is that, 18? 4. You've got 4 ticks. So, I mean, you could if you want. I'm going to wait just because I know this zone could potentially hold it and be bearish. I'll wait. Remember, the zones don't always have to retest. I just know the majority of the time they do. Sometimes if you wait for retest, you're going to miss the trade. And I'm okay with that because I know it's a much better trade waiting for the retest failure than getting it. This came within 4 ticks. You could go along this if you want when it gets back outside an ATR. I'm going to wait for an actual retest. What's going for this on the long side, as you can see above. What do we talk about every webinar? Resting liquidity. These are magnets. Right? You can see they pulled it into the number. Now they're putting it back in. Meaning most people would look at this and say, wow, look at all this, look at the support or the resistance up here. Someone wants to sell. I want to be short. It's the exact opposite. These guys, the longer this has been in here, the more willing they are to get filled, and they will get filled because they'll end up pushing the market into their orders. I tell you guys all the time, this is the game I played nonstop when I was scalping. I would put in big orders, right? It wasn't this far from the market, but then I would start putting all my orders in. I put like 1,000, and then I would start buying, and I'd see how the market reacted. If no one stopped me, I'd keep buying. Now I'm loaded up 3,000 long, and people would see me buying. They don't know who it is. Well, actually, you could see who it was back then. But anyway, they would jump on my coattails, and they push it right into my resting orders. That's exactly what's going on up here, guys. I mean, the simpler you can make it, the better you're going to do. If you just say this is liquidity, these guys want to get filled, this is the big money, they get their way because they push the market around. These markets are manipulated. If you can't beat them, join them. You know what they're trying to accomplish. You can trade to the long side, or your thesis is to the long side based on liquidity. You want to take other things into factor, but when everything lines up, everything looks bullish, and then you see the liquidity above too, you're like, it's go time. Now I'm just going to wait for my volume setup, and I'm in. Right? All right, I need a break from talking. Any questions, Sam?
Yeah, we've got a couple
Sam,
here.
the squawk guy sounds like you. I can't tell the difference. He's he's got a British accent too. It's
Well,
pretty funny.
if it doesn't work out at Bookmap, I know I can get another job than being a squawk guy.
Hey, you got a job there. You got to be up all hours, but
So we've got a question here. I think I know the answer. How are you getting those volume profile charts? I think that's Sierra charts, right? That's where you get your volume profile.
that's not. This isn't actually volume profile. This is market profile. So I don't particularly use volume profile because all I do, everything else is volume. So I like this look better. This is more based on TPOs type, time, price. What is it? Oh, I forgot what the O stands for. Opportunity, time, price, opportunity, right? So I use the TPOs as just a different way of looking at the market versus the volume profile. I know that the guy in here, comes on after me. I keep forgetting Tom. He uses volume profile, and that's fine, right? But I look at enough volume. I look at relative volume. We talk about this all the time, which actually we haven't really looked at today. Let's take a peek. This is showing you why nothing's going on, right? Look at this. Look at this relative volume. So this is, for some reason, on these other trading platforms, they don't show this type of relative volume. This is based on the exact 5-minute time period for the last 30 days. That's really important to me to see, exactly at this time, are we above or below normal volume, right? You can see this is pathetic. You see red, it's like 70%. That's why the market's not going anywhere, because no big money is coming here and participating. So let me show you an instance the other day where you could have been like, get all these out of here. All right, so this was crude on this $10 sell-off day. Actually, that's the hourly, 5-minute wise. Where you could have said, we talked about this in my room, obviously, you said, all right, something's up. Look at this, right? So the minute you start seeing, you come up with your thesis and then you see this and then you start to see this, look at this volume, 4, 5, 6 times normal. You're going to get a big move. This is big money playing, right? This is a whole different scenario than if you see like this. You see this, you get this, you get chop. You see this, that something big is about to happen, and boy, did it, right? So this is how you judge. So you can see the difference now in that versus how equities look right now. That tells me it is chop city, and you probably don't want to be trading, especially at this time of day. We talk every webinar at this time of day how poorly I've done over my career. I've lost millions and millions of dollars between 8 and 10 o'clock central. So you got this time of day. So this is showing you. You would normally say, well, this time of day, that's why that's why the relative vol is dissipating. No, this is showing you actually at this time of day, this is even worse. Like it should be up here, just even at 10 o'clock central, it should be at least normal for this time period. It's not even getting to normal for this time of day. This is just telling you are going to get you're going to get whipsawed, right? Until something picks up here. I mean, Nasdaq's not too bad, but ES is horrific. RTY is bad. Dow is bad. Like this is meaning when you see this, you really want to be careful on taking breakout trades. You're very, very likely for this market just to go head fake, back, head fake, back, head fake, back, until you get some big volume coming in here, right? And especially at important levels. Like this is a very important level. If you do not see big money coming in here, it's very unlikely this thing's going to push higher. It doesn't mean I'm going to get out of my position, but I wouldn't be surprised it came back. I mean, especially because I'm short this too. But it's something you want to keep an eye on. I forgot why I got on that tangent. Back to the market, because I was saying when I look at enough volume is what I was saying. So I use the market profile, the time component where it's just basing it on time, right? So this is today's trade, right? You can see these are just the half-hour periods. And then I draw my composites based on with the market, the daily value or the value areas of specific days line up more than 50%. Then I'll merge them together, and then I draw what's called a composite, and they are very, very, very powerful. Let's look at the last composite here. Like this day here, let's see. I think this was only a couple days, but let's look what it looked like and why I merged it. So you can see This was, it's like 624 was this day. There's your value area. Value area is just where about 70% of the trade occurred during that day. The point of control is the price that traded the most. Very simple, right? This next day, more than at least half of this day was inside the prior day's value area. So I merge them and make a profile, composite. And you can see, then you come up with stories based on what the market's doing. Like this day, try to get out and just rip back into it. Right there, I should have told you the tendency is to get to the other side. Boy, did it. It ripped right through it and then through it. And you can see the first time back up here, it's struggling. It's struggling. Do you really think this thing can push through here and rip if there's no volume coming through? That's why you want to know your areas and know what the relative volume is doing and your setups. So it would not surprise me whatsoever to see this fail out of here again. Just kind of do this until the big money gets back from lunch or wants to play. Right? That's why we're struggling right now. Still not stopped out of this puppy, which is good. Got that going for me, which is nice. All right, any other questions, Sam?
Yeah, I've got a question about how you get filled and partial filling. Do you always enter on a single fill, or do you ever scale into your positions, and what are the kind of pros and cons of those approaches?
I always get into full positions, but I will scale out in important areas, right? Especially if they're confluent with stuff. So like I scaled out right here, it was a little above baby lug, but I knew it was extreme standard deviation. I knew we were here. I knew it was, again, baby lug, and I knew more importantly, it was a spot gamma level, right? So if I get a lot of things that line up in an area, I'll get out of a partial my position. I put on the full position to start, but I'll get out of partial at important areas, right? But the answer to the question is yes, I put on full size, and then I get out partially. But I do add, so for instance, if a new setup came in, which it doesn't look like it's going to happen while we're on this webinar because the volume sucks so bad, something new came in and it got above here, and I know we're above the yellow lug, I would add to that trade aggressively, right? And what I would do, so I put on a new trade, brand new size, not even counting this, I'm not even looking at that, right? Brand new size, I put on a 5 lot or whatever it is, according to my risk that we've talked about. I would trail my stop and ATR below there. And then what I would do with this position, I would trail this stop then based on the new setup, right? So that's how when you catch, like the other day we caught gold, which is shocking. I know I said I was banning gold, but I was so mad I missed those moves. So that was this trade the other day. I don't have the screenshot because I just haven't had a chance to do it. But this day, when you catch a day like this, again, you can see it on the chart, but I don't have my actual charts in here. I usually have a chart in here. I don't know where it's at. It's interesting. But when you catch a day where you get setup after setup after setup after setup, you keep adding and trailing your stop, you have a month making day. And shockingly, this is pulling back right here, just like we thought, because there's nobody in here to play except for the algos. So if you like to get algoed, this is your time to trade between 10 and 12. If you like to get whipsawed and be tortured, this is for you. If you don't, you say, I'm not trading from 10 to 12. We talked about that. But anyway, when you catch what we're talking about adding to your positions, when you catch a day that's trending, you're going to get set up. You take your trade. You get another setup. You take that trade. You trail your stop based on your first setup. And on the days you get setup after setup after setup, like that gold trade, you can keep adding, and you have a month making day, a year making day. And that's what your goal should be as a trader. You're kind of treading water, lose a little, make a little, lose a little, make a little, and then you crush it when you catch the trend. We talk about this all the time as well. If you think you're coming in here and you're making consistent income every day, I want to make $500 a day and I'll be good. I quit my job. I'm gonna make $1,000 a day. Guys, it's not gonna happen. Yeah, over if you have an edge and you know what you're doing and you control your risk, you make 20,000 in a month. You split that up in a day. Per day, you're making $500 in a day or $1,000 a day. Fine. Yeah, that's possible. What I'm saying is you can't rely on consistently making $500 a day because this is not a normal job. It's not going to happen. The nature of the markets, you're going to have down days, up days. We've talked about this again. We talked about this last webinar. This is what, when you have an edge, this is what your P&L is going to look like, right? We just talked about this last week. I understand, but there's always new people on here, and this is so important, right? You can see these drawdowns were not fun, but I just kept putting on my trades because I know I have the edge. Drawdown, 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 drawdown. This one was painful too. Back to new highs. If you have an edge, that is what this doesn't mean I'm making money every single day, right? Winning day, losing day. Winning, I don't know why that's there. Winning day, losing day, winning day, losing day. That's what I'm talking about. You're not going to have consistent making $500 a day, $1,000 a day, whatever you think in your mind you're going to do. It's going to look like this. Does that mean that, I'm not a good trader, don't have an edge? No. It means certain days are just weird, and these are markets. Things happen, news events happen. You're gonna have drawdowns. If you have the edge, you follow your rules, follow your risk control rules, stop yourself on days you're doing poorly, have that in place, like we talked about. Your equity curve will look like that, right? This is trading. Like, if you can't grasp this or accept it, you're not going to make it as a trader. If you think your equity curve is just going to do that, you may get lucky. You might do it for a week, maybe a month. It's not going to do it forever, and you're going to have pullbacks. And it means every time you have a pullback, do you just quit your system and go try to find another magic indicator? No, right? You say, this is the nature of the business. I guarantee this P&L looks just like a casino's P&L, right? Just like that. Someone comes in and kills them. Someone comes in and kills them. Guess what? Then all the fish come in and give it right back. This is what it looks like in a probability scenario when you have the edge. If, again, you need to grasp that and accept it in your trading, or you're never going to make it.
Yeah.
And the biggest thing you got to take from that, like I said, is you don't want to be jumping ship every time you have a losing day, losing week, especially if you know you have the edge. If you don't have an edge, then yeah, right? Not that you want to be jumping ship, but you shouldn't be trading real money anyway. Do the apex, do that stuff where you can trade, learn, come up with an edge on your own. If you don't want to follow what I'm doing, until you know it works, then trade real money, right? But in the meantime, this is why I do these webinars. This is why I have my trade room, to show you what I do, where you can take some of the stuff that you may not like everything that I do, or the areas that I look at, and so on and so forth. And that's fine. I'm not saying this, you've got to trade like me, forget about what you're doing. What I'm saying is, this stuff here is number one. This is not an art. This is the science. If you can apply this stuff in important areas that you deem important, there's your edge, right? Or you can trade exactly like me, right? It doesn't matter. The point is, take bits and pieces of what I do and build your own playbook. I had a guy the other day tell me I didn't understand what you're doing on your webinar. This guy in my room, and I took a short, and you were long, and I didn't understand, and I lost a third of my account value. It's like there were so many things wrong with what he said. My head almost popped off of my shoulders. This is a guy that's presently in my room, right? That all I do is do this rant every day, right? One, you can't be risking 30% on a trade, let alone in a day. You're going to blow out your account. Two, my room and these webinars are not to mirror my trading, guys and girls. It's to learn how to do this yourself. You are never going to be a consistent trader if you're mirroring anybody, and that includes the Tom B and anybody else that you think you can put on the trade. The guy, I've watched a couple of trade rooms, especially before I started my own, to kind of just see like if it was bullshit, pardon my language, and what they were doing. I watched one. The guy would like get in along, and then he'd be like, oh, here's my target, blah blah blah, and everyone's like in the trade, and then he would just get out, and people would be saying, what just happened there? Why'd you get out? Oh, because I just saw something in NASDAQ, so I got out of my... It's like, you never know what guys are going to do, first and foremost. You cannot mirror other traders, right? You've got to learn this for yourself if you want to do this for a living. That's just the way, just like the P&L and everything else we're talking about. That is a guarantee. If you think you're going to mirror someone and make a bunch of money, it's not going to happen. You've got to learn to do this for yourself. And that is the purpose of this in my room and everything else. So again, that trader was like, I wanted to pull my eyelashes out. I was so livid. I'm like, what are you talking about? You're risking 30% on a trade. You're mirroring a trade. You didn't even know what I was doing, and you mirror. And I don't even want to go down that rabbit hole again. I'm getting such as talking about. But please learn to do this for yourself. I'm not saying you have to do it exactly like I do it. Take bits and pieces that you like and build your own trade plan. Until you can do that, you're not going to be consistent, and you're not going to be able to do this for a living. All right, that's my rant. All right, this is
stuff,
working
Scott.
here.
I love these rants.
I'm out of breath on that one. I'm telling you, that one really, I was like, and this is a guy in my room too. That is even more insulting to me, because it's like, what am I teaching you every day and you're not listening? So anyway, I forgot to put my stop in here for this, which could have been disastrous. This is not good trading. Don't do that at home. Let's see where my stop should be on the soybean trade. So the ATR here is 3.77, right? So we go a little outside that, so it should have been 4 cents outside here, so 74.25. If you guys are saying, soybeans, what? I don't want to trade soybeans. This is my best market, right? I don't discriminate. I don't care. It doesn't matter what you are trading. Like, look at this. Look at this. Look at that, soybeans, number one. Number two, natural gas. The two markets I tell you guys to watch when the equities suck. Here's ES, that's my third best, which I'm shocked. GC gotten crushed since the war. CL gotten crushed since the war. Everything else is pretty, it's either, even or slightly profitable, right? Do not discount other markets. It's all the same. As long as you know the thresholds for your trading for that individual market, again, that's going to be part of the course. It's part of my old course too. Then you know when it's a tradable area or not. And it's all the same. It's all the same principles. It's volume drives the markets. People are caught. Big money is playing. When you know that, you have the edge. It's, as I know I'm a broken record, and I say it every webinar for 3 years, but it's what it is. That's what trading is. It's not magical prices. It's not magical indicators. It's what the volume is doing at those prices and indicators. And that's the edge. Somehow, some way, do you see why I go outside an ATR here? So I'm still alive in this NASDAQ trade too, and I got out of half of my yes. I'm not expecting much here right now anyway. It wouldn't be surprised me if this just tortures me for another 2 hours, right? Because there's just no volume coming through these markets right now, guys, as far as the relative volume. That's when you say, I'm out of here, I'm going to work out, I'm not going to give my money to these algos. I told you, I'm doing better at just getting up and leaving during these hours. It's obviously very hard on these webinars. Look at this volume. This is pathetic. Look at ES. What was this bar here? This is just sad. It's like not even half a normal for this time of day, and this time of day sucks. That's why you're getting chopped. Nasdaq's not horrible, but all right. All right, the Tom guy's starting here soon, so if there's any other questions, I haven't done much trading, obviously, but hopefully you guys got some good lessons as usual, I would hope, for my rants. This is holding the stop run. Did we do the retest? They got within that 4 ticks, right? But I never retested. And that's what I said. Sometimes you're waiting for a retest, you miss the trade. But this came within 4 ticks. I could have been aggressive. Another instance I didn't like where we were in that zone, but it looks like we're getting out of that zone again. But there's your ATR, came within 4 ticks, gone. That's a tendency. All right, any other questions before I hop off here?
Yeah, we've got a couple, and I just wanted to add, going back to this partials and adding. I didn't want to interrupt you when you were going on, but yeah, I recently reread Market Wizards, and Gary Beifeld, I think it was, said in that, have a method for staying with winners. And I guess that is the method right there. You need those month-making days. And if you don't add, and if you don't get aggressive when you're right, then you're not going to have those month-making days. So yeah, that's why it's so important to kind of add to your winners and keep it going.
Right, but that's very abstract too, though. It's like you always hear all these traders, cut your losses short and stick with your winners. Well, what the hell does that mean? How do I know which one's going to be a big winner and which one's going to be like? I understand the cutting the losses short, but the point is, when you have this information, you can control your risk, and you can add as the market goes in your favor with new setups, right? So that is the epitome of cutting your losses short and letting your winners run. But when I hear that, no one ever quantifies that. What the hell does that mean? Let your winners run. Okay, so I know this one's going to be the winner. How do you know until after the fact, right? So when you have this information, this is exactly what this helps you do. It helps you cut your losers short and then potentially catch winners and then add to the trade, kind of like that gold trade. You don't always get those moves, but you get, the point is you can still get huge moves off of these. You're not always adding, but that is the epitome of cutting your losers short and adding to your win, or letting your winners run by basing it off the volume and the setups and understanding what's going on with the volume.
Yep. Final question here then. Alex in Discord made a good point. Given that you're kind of more profitable in some markets than others, would you ever consider just focusing on those top 3 markets? Maybe it's suggesting that what you're doing is working better somehow, or you still want to keep your options open and trade across?
Well, no, well, absolutely not, because that's what smart people do. Dumb people keep trading markets that they suck at, right? Like gold and crude. I have, so I was telling you guys about the Apex, right? So I'm doing an experiment in there because, so especially the 80% off stuff. I have 4 different accounts, and a couple of them I'm trading grains only. So I just want to see, like, I want to see this in those accounts as well, because I'm doing them from other people as well. So the point is, yeah, but I don't want to pigeonhole myself into just trading soybeans, right? I want the options because I know this works across the board. These two markets haven't worked lately since the war. I understand that. So when you see you're struggling in the market, just don't trade it for a while, right? I was off. I stopped trading gold for almost 2 weeks, and then I got back in the other day and made that the big winner, right? So yeah, you could, but I don't want to just stare at one market, right? I want the option when all these other markets are firing off because I know it works in all markets, right? It just does. Like, yeah, some markets it works better sometimes, but I could tell you, this is short term. This is 6 months, right? So it's like 6 months of P&L. So, over a year, I'll bet you, most of these are the same. So you got to be careful saying, "Oh, I'm not trading these anymore," because I know these eventually will be up here when the weirdness stops. But I don't pigeon myself into one market, but I am doing, again, a couple of those Apex. I just want to just trade explicitly grains, and that's what I'm doing. You can do that, absolutely. I don't personally, especially it's hard for me too, because in my room and in these webinars, you guys want to see, you don't all trade soybeans, you don't all trade just ES. So I want to cover the gamut and I know it works no matter what futures market you're trading. I know that's the same stuff, regardless. It's volume and traders caught and big money playing. Doesn't matter what market you're trading, as long as you know your thresholds. All right, I think that's it. Volume is still horrendous in all these markets, plus it's a terrible time of day. Don't get me on that rant for how much money I've lost at this time of day between 10 and 12 Central. And I think that's it, unless there's any other questions. And like I told you, I fully expected this NASDAQ trade to come back because that is the nature of algos. You are going to get whipsawed until the big money comes in and pushes them around. Then you're going to get your big move.
Yeah, I mean we've got a couple more questions here. If you've got time, it's up to you, Scott.
Yeah, just fire a couple more, and then I don't want to go into that guy's time either.
What's the name?
Other trader.
Andrew is asking here, what's the name of multiple chart platform indicating ETH VWAP? And what did you say about 7% volume shot in first 2 hours? So now ES chop.
Okay, that was a little confusing. I think that's a lot of questions into one.
Yeah, there's a couple of questions there. First one, what's the name of multiple chart platform that has the extending?
That's the Sierra chart.
Yeah,
Sierra chart.
Yeah, that's Sierra.
So
chart.
Very cheap, very, very, very labor intensive. That's all I can tell you. You will go down a rabbit hole. Like when I first got this, it took me like 3 hours just to learn how to build a bar chart. It's that in depth, and that's why it's so cheap, right? That you get what you pay for. It's very reliable. It doesn't go down or anything, but support's not the nicest. You send them a message and they act like you're a moron, and you got to do everything yourself. But if you're looking to cut costs, which you always should be doing for things that you can find other places, right? You shouldn't be cutting costs. Like I get all these emails all the time, like, what? I got to pay for the SI indicator, then I got to pay for the rhythmic. Guys, there's some things that you want to pay for because it's going to be worth its weight in gold. There's other things where you can find alternatives. Why do you think I use Thinkorswim? I don't need to pay for a chart. Thinkorswim, you put any amount of money in there, you get access to their charts. Why do I need to be spending $800 a month on charting like I used to do when I was trading, which again, I didn't know any better back then, and there were not many options other than CQG at the time. But why would you pay for charting if you can get it for free for bar charts, right? Those things you can cut costs, right? But back to this, this is $35 a month. Highly recommend it if you're looking to cut costs. That's good, but you got to do everything yourself. You can Google how to do stuff, obviously, but it's still a pain in the ass. It's not just plug and play, right? Most people like to plug and play, like NinjaTrader. You can just bring it up, your charts are there, boom, Thinkorswim the same. But this particular thing, the market profile on here is Sierra chart, and then they have this relative volume on here. I don't understand why all these other platforms. So for instance, this relative volume, I talk about this all the time as well. I apologize if I keep repeating myself. This is a different type of relative volume, right? This is showing you Remember we said the other one was based on the exact 5-minute period. This is different where it's showing you the last 60-minute time periods. So of course the open every day is going to be like 7 to 8 times. Well, that's normal because it's taking into consideration the overnight trade where there's no volume, right? This doesn't help me gauge what is, you know what I'm saying? Like, I know if I just were looking at this like, oh my God, this volume is huge at the open. No, it's 7 to 8 times is normal, right? I don't want to be guessing at each time period, hey, is this normal? Is this not normal? Based on this is what this is showing you, and based on the open. If you look at the Sierra chart, and again, I don't know why every charting platform doesn't have this. It can't be that difficult. This is showing this exact time period for the last, you can set it for whatever you want. The last 2 days, the last week, mine is set for 30 days, right? I'll show you this quickly, just to show you it's not very complicated. There's relative volume, right? And then it turns yellow if it's over 200%. It's actually less than that, or a little more than this for it turning red, but it shows you 50%, 200%. You can see my days that I have it set for. It's 30 days. You can put this for 2 days, for a week, whatever. I personally have it for 30 days. But this is showing me for the last 30 days, this exact time period, the 1040 central time period, we're like half. We were half. No, it wasn't half, it was about 80%. That's important for me to know. I don't like the thinkorswim relative volume because I'm guessing, hey, is this normal? Like the open. I have to know from my experience that 7 times volume, that's normal based on this type of relative volume chart because it's basing it off the prior 65-minute bars, which means nothing, right? It means nothing right now. So I don't like this. I have it up here, but I don't. This is my preferred, and you get this in Sierra chart as well. They got a bunch of studies, right? And also I use my Ludwig levels through here too. Right? You can get these on NinjaTrader, and then again the Bookmap. Get in my room, you can get the beta testing for that as well. But I use mine. I'm going to continue to use mine here just because there's just so much on my Bookmap chart. All right, other question?
Final thoughts on NQ?
Yeah, just being tortured. I the short on the beginning of the webinar, hour and a half ago. Volume's terrible, so I fully expect that. I would 100%. We're right here. Right, this is such an important zone. So even if we move up a little higher, say it moves up higher, stops me out, and I get a short signal, I'll be glad to give this short a chance. One more time, this is where this was this balance. This is where this whole directional conviction move started that led to this down move, right? Very, very important. If we rip right through here, you want to be long. If this holds, you want to be short. And I think we'll come down to this stuff. But nothing's happening right now, so it's just probably just going to bounce around here. It's probably going to build balance right here. What you want to be careful of, so say this we just talked about this at the beginning of the webinar, say this builds balance over today and say tomorrow and it looks something like that. Well, is this a zone you want to be shorting? If all these traders are loaded up right here, say that all these traders got short and we start to rip out of that balance area, kind of like this one where we rip down. No, this is not a great short in this area if you build balance right below it, because then you're going to have traders puking rips right through it. That's a different scenario than a straight beeline move into the zone like we were talking about crude. See how this is different? We didn't really build anything. This has gotten through here as of right now. But this is another example, right? If you're just looking at this, you're like, I'm going short. Well, you just lost. My volume, the volume setup's the most important part, told me no shorts here yet. So now I'm watching this zone and this zone. But my point is there was no balance right below this zone. So this would have been a good short if I got the volume signal. I didn't get it. On to the next zone. On to the next zone. Right? This is the most important zone. We get up here, you should be shorting that with both fists if you get a signal. Until it can push through. If it pushes through, then you want to be long. The point is we're in limbo here in NASDAQ.
Okay.
If we get through this zone, you want to be long because we're coming up to this, probably 12,300, 12,400-ish.
Sorry, I'm lying to you, Scott. I got one more, definite final one. Because this is quite a good one. Lucero, he's asking, so sweeps taking resting liquidity versus sweeps that take stop losses. Is that telling you anything? Do you create a distinction between those different types of sweeps setups?
I don't have exact setup for those per se right now because I just haven't had enough time to dive into the actual all these different sweeps. But absolutely, right? Like when you think about it, if a stop run fires off, a buy stop run through this liquidity, well, what is that telling you? It's just telling me there's guys puking. That's different than if you see sweeps that say I'm taking all this liquidity and it's not a stop run. That is a different scenario. So absolutely, I guarantee you can come up with edges and or trade plans based on that alone. Where if you see huge sweeps that aren't stop runs, that means someone is buying aggressively and they don't give a crap what's in here. They're taking it. That's different than if it's a stop run through here. That's just guys puking. That's not real buying. It's buying, but it's not initiative buying. Sweeps that aren't stop run is initiative buying. So there's definitely a difference between the two. And if you can go back, that's another incredible thing about Bookmap. You can replay any day. It's like, if you got to have the data, right? So that's another perk of my room. If you remember my room, you get quickly. I'm plugging my room and I'm plugging it for a reason. Like that's my golf stuff. Sorry. You get 400 plus of my webinars that I've done in my room since last April. So almost a year and a half of webinars, year and 3 months, whatever it is. And then the other thing I offer here is so you don't have to store all this stuff in your computer. You may not have it. Plus, you may not have all the products that I'm looking at. You can go to any day for the last 2 years, basically, and replay the day. So you go in and replay the sweeps, and you can come up with your own. You see, okay, what happens when there are sweeps, when no stop runs, and they were large? What happens? Did the market hold? Did it fail? You come up with your own trade plan, right? That's the beauty of Bookmap. You can replay the days in practice. You can pause it. You can speed it up. It's incredible. If you're not doing that, you're not putting enough effort into your trading because you can practice how to trade. With that, you don't have to be doing it live. You can practice. You can watch my webinars, put my webinars up against replaying a day and say, okay, what would I have done here? What did Scott do here? And so on and so forth. As you've got to put effort into this. If you think you're just bringing up a chart and throwing in orders and then being done for the day and think you're going to make it, you're not going to make it. They are the brightest minds on the planet trading, right? That's what algos are. They're bright minds that came up with trade algos to take your money. Well, how do you think the algos survive? By taking your money, by taking the unprepared's money. So if you want to make it in this business, you have to put some effort into it. If you don't want to put the effort into it, you think it's like a casino or going to the racetrack or rolling dice, you're going to lose overall. You may get lucky for a while, but you're going to lose. So you got to put effort into it, meaning you need to practice. Practice. We're talking about practice, not a game. Practice. Anybody tell me what that's from before I get off? A little comedy.
Don't ask me.
Not a game. Practice. Come on, somebody knows this. AI, exactly. Allen Iverson. One of the funniest clips. The two clips you want to watch. That Alvin Iverson clip. He says it for 3 minutes. He says the same thing. The reporters even start laughing. And the other one is Jim Mora when the Colts lost a play. They lost a regular season game, and one of the reporters asked him about the playoffs. This was actually a commercial, I think, too. Playoffs? You're talking about playoffs? Not going to the playoffs? We suck. There's some comedy before we go. This is not comedy here. I'm about to get stopped out of this Nasdaq trade, but it is what it is. Still long, a couple ES and just waiting for new signal. This is not a good time to be initiating positions. Wait till noon Central, and then I'd be looking to trade here. But I stopped out. Yeah, just threatened here a couple times. But got that on. Let's take one quick look at soybeans. It's my only other trade right now. This is working. Let's just take a look at a couple targets and then hop off here. I'm going to go into that Tom guy's time. Beans. So I will look. I don't get out of VWAP unless VWAP is confluent with something. It wasn't confluent with anything there. So I'll be looking at Yola. It's another 14 cents down. I will get out of at least half of those if it makes it there. Or if I get an opposing setup, I'll get out and potentially flip long. All right, guys, out of gas. Hopefully that was helpful. I do this every day in my room, twice a day. If you like it, if you want to learn, that's where you can learn.
Thank you, Scott.
I'll see you next Thursday.
Yep, extremely good stuff. Yeah, we'll call it there. And thank you, everybody, for attending. We hope you found this valuable. Again, please hit that like button on YouTube if you liked what you saw. Yeah, we do this every day, 10 a.m. Eastern time. So catch us for another one soon. And thank you again, Scott.
Talk to you guys later. Thanks.
Bye-bye.